Heath, good to see you. Great to have you here on set.
Yeah, thanks for having me, John.
I don't know if I've ever seen anything like this, where there's a private company at this scale and valuation that's so influential over some of the biggest, oldest stalwarts in the market, in tech and media, and over the market itself. Have you?
No, I mean, there's never been anything like this. I mean, people make comparisons to 1999. There is no comparison to be made. This is uncharted territory.
So is OpenAI sort of potentially a single point of failure in the sentiment in this market? Sometimes it gets circular. I don't think it is. You got money coming into OpenAI, and you've got money going out of OpenAI. In this case, coming in from Disney, going out to Oracle. Questions about whether the product is going to be good enough to keep that sustained. How much is that going to influence what the valuations look like in tech in the next year?
Yeah, absolutely. I mean, we always talk about it as having an off-ramp, right? It's okay to have circular financing as long as there's a customer on the other side of it. And right now, the customers are companies like Citi and JP Morgan and Pfizer and Walmart, and real companies that are adopting all of this. Disney today, that are finding value in AI. And the reference of sort of OpenAI as a single point of failure, this is not, unlike a lot of other technologies that we've seen over time, this isn't a one-person, one-company sort of technology, right? Google's doing a lot here, Microsoft, AWS at Amazon, all big companies that are participating in this. And the adoption of AI that's happening at the enterprise isn't dependent on any one of those companies' success. So if one company doesn't do what they thought they were going to do, there are three others that are going to pick up that slack. It's not going to slow down the pace of adoption at these big Fortune 500 companies.
It's interesting to hear you say that. I mean, point blank, is corporate America actually finding value in AI yet?
I mean, I think the answer has to be yes, right? You look at the pace of adoption that you're seeing and this acceleration in adoption that you're seeing. And that's something that shows up in the revenues of all the hyperscalers, the backlog numbers that you're seeing there. There are real customers on the other side of it. And I think we're going into this phase as we get into January and you start seeing Q4 numbers, you're going to see this sort of productivity kind of creeping up, whether it's revenue per employee, whether it's margins, as companies take advantage of the fact that they are getting efficiencies out of this in code development, in customer service, in white-collar labor automation across really the forefront of things. Financial services will be one of the, I think, first places that you see it, but you'll see it in healthcare, you'll see it in retail, you'll certainly see it in sort of energy and industrials, where companies, not all companies, but most companies are really trying to adopt this to take advantage of it.
So then looking at 2026, is that how the AI trade evolves? Is it to evolve beyond the hyperscalers into enterprise AI?
Yeah, I think so, right? We are slowly sort of working our way up the stack. We've gone from chips to optical to memory to storage to now the hyperscalers and into some of the software layer, particularly at the data layer, where you're seeing these consumption-driven models really benefit from all of this activity. So I think we're going to continue to do that as we go into 2026. But I also think you're going to start to see this derivative trade, and to some degree you already are, this derivative trade of who are the beneficiaries, which companies are best at engaging in this, which airline is better than the other in terms of route optimization and predictive maintenance and all of the benefits that you can sort of get out of AI, which energy exploration company or oil field services company is doing that better. And I think a lot of portfolio managers will look for that kind of trade if they aren't already.
That would be a dramatic development in the market because there are a lot of application software names that have actually been depressed on the AI trade, right? The idea that the OpenAIs, the Googles, et cetera, are going to cannibalize them. Yeah. If we're going to start to see them pick up on the idea that they're actually benefiting, is that what you're projecting? Yeah,
I didn't say that.
Okay.
Right? So the application software guys are sort of in a different place, and that's one of the things that's been kind of disappointing about, particularly to a lot of investors, about the way that this is played out. The sort of horizontal applications within AI really haven't gotten a lot of traction. The co-pilots and all of the world, nearly as much so as these individual fit-for-function kind of applications that companies are building. So, building an agent within a bank to match up credit card transactions or handle ACH wires or KYC, AML compliance, that kind of thing, which very narrow, but it's built on the back of these APIs that drive token consumption, which drive revenues for the clouds. And so over time, I think maybe we do get into that application layer, but I don't think we're there yet.